How we doing, traders, and welcome to the SPACs attack. Let's do it. All right, traders. Mitch is back. Mitch is back, baby. I had a great birthday. I'm glad to be back with my sidekick, Chris Ketchy here. You guys already know the brains to the show. Been working hard, to make some improvements. Hope you guys like the new lens that I'm working with, and we'll keep improving, guys. At the end of the day, we're gonna keep working hard. The show's just gonna keep growing with you guys. So you guys that are loyal fans that are out there, first, definitely smash that like. Let's get going here. Chris, how you doing?
I'm doing good. Hey, it's great to have you back by my side. We had Spencer fill in for 2 days, but I know a lot of people missed you. So happy birthday again to you. Yeah, great to have you back.
Yeah, guys, I know there's a lot of stocks moving, so let's just get right into the headlines so that we can get to our great interview later. I'm super excited, so take us back, Chris.
All right, so up first, we're going to start in the same spot that we started on Friday. So we talked about LCA. So that's the Lancadia SPAC merging with Golden Nugget Online. So on Friday, I discussed how that vote did not go through because it did not receive enough votes to pass. I know we got a lot of backlash on covering this. And remember, this show is all about the facts. So this deal did not go through because they did not receive enough votes. They actually passed an amendment this morning to that deal. So now they need to get the majority of common stock to vote yes versus the majority of the outstanding Class A common stock held by current stockholders. So they said that 99.8% of Class A shares were voted in favor of the business combination, but only 40.5% of holders of Class A voted so far. So shares were down 9% on Friday. They're recovering a bit today. And with that restructured deal terms, it looks like this deal is likely to go through on December 29th with that revote, as Fertitta actually owns a good portion of those shares and has already voted yes. So it looks like this deal, may have been in trouble, but with that restructured terms of the deal, I don't see it having any problems passing going forward. Up next, we have PIC. So this is the SPAC merging with XL Fleet. It's an electrification play. Their vote is today. This company was highlighted on Mad Money Friday with Jim Cramer. He said, unlike most of the electric SPAC plays, its products are already on the road. He called the company a steal, but said don't chase it too much past $20. Obviously, the same thing happened with most of the SPACs covered on Cramer's show. Stocks were up around 18% in after hours on Friday, and they are flying again this morning. Full disclosure, I am long shares of PIC. I think that vote gets approved today, and I think this one keeps running as we go forward with that electrification, EV play for that company.
Yeah,
Go ahead.
just jumping in here, this is actually one that you brought up early last week. This wasn't one that we brought up on Friday. This is one that we brought up early in the week on the 16th. It was down by around $15, and now you're sitting up there around that 18 and 19. So definitely, guys, hit the like below. We bring it to you guys first. Go ahead and continue. Let's keep going.
Yeah, we're seeing more of those stocks trade higher going into the deals. That seems to be a common trend again, which was why we highlighted PIC during the week. Then up next we have Open. So IPOB, former SPAC. Those shares will start trading as OPEN today. The company did ring the bell this morning and is getting a lot of attention. Those shares have traded quite higher throughout the past couple weeks in anticipation of that event. Another favorite on the show here that we like to talk about is RIDE, RIDE, Lordstown Motors. So this morning, the company tweeted out that they have reached 80,000 pre-orders for their endurance pickup truck. So back on November 18th, the company said they had 50,000 pre-orders. So it appears that strong demand is being seen for this highly anticipated electric pickup truck for 2021. Reminder that the company did just sign a partnership with Camping World that will help with sales and service that could also lead to Camping World retail locations eventually selling the truck. And those two companies are also working on an electric RV. Disclosure, I am long shares of RIDE here. And I do think that this one goes higher. That is a big pre-order number. Again, a lot of that is from fleet customers that they will be working with first before that goes out to consumers. But to go from 50,000 to 80,000 pre-orders in less than a month shows that there is some demand there. Next up, we have IPOC. So IPOC is merging with Clover Health. Shares were up 10% on Friday. I'm seeing this one get a lot of attention on Twitter and in different SPAC groups. This is one that we pointed out when it was trading close to the $10 level. It's now around $13 as it heads into a January 6th vote date on that merger. So again, it's always worth checking out some of those SPAC deals that have been announced that trade between the $10 and $11 level, because we are seeing them run higher as they get closer to their dates. On Friday, we had a deal announced for symbol FSRV. So this is FinServ Acquisition acquiring Catapult, a company that helps consumers and merchants with lease payment options for e-commerce. Shares were up 35% on Friday. They are trading down slightly today. Again, that is a company, bringing those leasing options to consumers to benefit both them and the merchants. I think this is one worth looking, as they are the peer play in the non-prime lending space for people who may not get those loans approved based on credit scores. The company does not use credit scores in their loan options. And then, so that's it for headlines. I want to turn a little bit to the calendar. I see 5 votes on the docket today. So as I mentioned, PIC. Then we also have PTAC. Yep, Mitchell put them right on the screen there. So 5 votes today. So a lot going on. We need to pay attention to these names to see if they all get that kind of boost on their vote day. So I'll be watching those ones today. And again, I do own shares of PIC here. So that's it for headlines, Mitch.
Let me bring myself back in here, guys. All right, so how we doing out there, traders? Definitely want to go ahead and recognize some new faces. So if you're new to the show, say hello in the chat. I want to see some new faces out there. So I want to say definitely hello to how we doing out there, Carl, Jeannie. We got Shermone, the boy in the house, Jay Towers. Where's Tiger Woods at, man? All right, guys, we got Rick M in the house, RG. How we doing, guys? It's always good. His eyes lit up when he heard about this opportunity. So let's go ahead and let's talk about this. Chris, let's just bring in our guests. Let's start it off.
Yeah, so guys, I'm excited about our guests today. As SPACs become one of the hottest trends of 2020, it looks like now not a trend. This is going to have staying power, as it offers more investment options for companies. So we have a new actively traded SPAC ETF that hit the market last week. So our guest today is Matthew Tuttle. He's the Chief Executive Officer and Chief Investment Officer of Tuttle Tactical Management. He's also the author of How Harvard and Yale Beat the Market and Financial Secrets of My Wealthy Grandparents. He's a frequent contributor to several financial magazines, and also behind that ETF. So welcome to the show, Matt.
Thank you for having me.
Welcome on.
Thanks.
All right. So I know a lot of people are wondering what Matthew really does here. And so I'm going to let Chris just get right into the questions so that we can go ahead and get the value out of this. Let's go ahead and get into it.
All right, Matt. So first up, so we saw a different SPAC ETF hit the market this year, but yours is a lot different. So the biggest difference is that this is actively traded. So can you
actively managed?
Actively managed. So can you kind of explain to our viewers what the difference is and what actively managed means?
Yeah, so actively managed basically means that we can do whatever we think is best in the SPAC market. Another fund is out there that's an index fund. And the problem is, this is constantly changing and evolving. New SPACs are being issued every day. There's just so much going on in this market. I can't imagine doing it any other way other than being actively managed.
All right. And then, so how do you make your selections on which SPACs to include in the ETF?
So the biggest thing we're looking at is we're looking at the management teams, we're looking at the track records, and then also we're looking at the valuations to an extent. I mean, there's so much out there that we don't have to pay up ridiculous amounts for that. We're very active in the new issue SPAC market. So, we're looking at all those deals and kind of making determinations, again, kind of, based on the management team and the track record.
So a lot of SPACs have hit the market in 2020. I saw on Friday we actually got 12 new SPACs announced. What do you kind of see happening in 2021 in terms of new offerings? Do you think we need to slow down with the number, or do you think, we again hit the 200 to 300 level of new issuances?
I think this keeps getting hotter and hotter and hotter. The fun drinking game is watch CNBC. Every time they say SPAC, take a drink. You're drunk before the market even opens. So, I think this will definitely continue. And from our standpoint, the more we've got to look at, the better. So, keep it going.
Awesome. So I heard you say management teams. I know that's something we've talked a lot about on the show. Some of our guests have brought that up as well. So when you're looking at those management teams, what are some of the factors you're looking at? Is it completed SPAC deals before, have a history of publicly traded companies, or just kind of overall, experience in the industry?
I mean, it's really all of the above. Like, I heard you mention IPOB earlier. And, so we've got the three, the three other SPACs from social out there, just because, everything those guys have touched has been great. So, that type of stuff is certainly something that's going to stand out to us. Churchill, is our biggest holding. There's another one. But then, as far as not paying up for stuff, we don't own the Pershing Square one. Obviously, we have no issues with the management team. That we're just, we look at the valuations more than anything. We do have one kind of celebrity one, I guess, with Billy Bean. But, it was a Boston guy. That one's near and dear to my heart because we're talking about Fenway. But and beyond that, it's, we're really looking at, the track record and the management team.
Awesome. So it looks like right now, investing in some of those SPACs that have not announced their deals yet. So I'm just wondering, what is the process after those deals are announced? Are you looking to get out on those spikes, hold these through the vote, or kind of a mixed bag of both?
So that's the beauty of being actively managed. We can take that stuff on a case-by-case basis. What I never want to change, though, is I want our ETF to have SPAC exposure. I think SPACs it's a new asset class. It's not necessarily correlated with the equity markets. Look at today. Last I looked, the market was getting killed and we were up. So I never want to change that. So I don't want to get into a situation where we go from, holding a bunch of SPACs to holding a bunch of equities. Then you're not a SPAC ETF anymore. So I would guess, and again, it'll be case-by-case basis, I would guess most of the time if something pops, we're going to want to take advantage of that pop, at least to an extent. But again, it'll be case-by-case.
And so in the ETF, I'm seeing some units held, which we know, of course, once those units split, it can translate to common shares and warrants. Do you plan on holding both common shares and warrants?
So again, it'll be case by case, but I would foresee that most of the time we'll be holding on to both of those things.
Awesome. So you mentioned the Billy Bean ETF. That's one we've talked about a lot on the show. RBAC, and then another one that I see in your holdings that we also like to talk about is SEAH. So those are both sports-related SPACs, both pre-deal, and they both kind of trade under that $11 level. So what is attractive to you about both of these names in that sports space?
Yeah, so there's a couple of things. I mean, one of the other things we want to do is we want to be as diversified as possible by industry. I mean, sometimes obviously you've got no idea, but you want to be as diversified as possible by industry. So, having, two names that are going to do something in the sports space, it gives you industry diversification. We do like the management teams. And again, yeah, I mean, I'm a Boston guy, so if one of those guys buys Fenway Sports, I mean, that's a bonus.
How much attention do you pay to some of the rumors that get out there then before these deals go through? So like WPF, I'm seeing new rumors about that one. CCIV linked to DirecTV. Do you pay attention to those rumors? Do you ever think about selling? If they go up double digits on the rumor, or do you plan on kind of case by case here as well?
So again, case by case, but WPF is a good example. Was talking with our team this morning and kicking around the idea, hey, if this really does pop, we may want to sell into that. I mean, I know it was way higher pre-market than it was last time I looked, so that may not come into play today. But like I said, yes, case by case, but if something goes up a lot on a specific day, kind of be interesting to take some or all of those profits.
Awesome. So, so I see IPOE and IPOF and IPOD all in the top 10 holdings. We talk a lot about Chamath on the show. Is it important to kind of hold shares of those ones from him since he has such a good track record with the existing SPAC deals he's done?
I mean, that's exactly it. I mean, obviously we like those guys. We like the track record. Everything they've touched has been great. And so, you add those all up, I think they may come to our largest holding.
Awesome. Mitch, do you want to jump in here with some questions as well?
Yeah, of course. One of the things that I've noticed is that in the SPACs, I've noticed it's kind of like these three waves. You get the first announcement wave, you get a nice ride up, and then you kind of get this dip down, usually hang around 10 or something like that, depending on the price of the SPAC. And then you'll see the pop into the merger vote. And then after merger vote, a lot of times we're seeing that kind of that dip back down, trying to get that evaluation correct. Am I kind of off on this pattern, Matthew, or is this kind of similar pattern that you see?
No, I mean, we've been seeing similar, and that's why I said, again, it's case by case, but I could foresee a lot, if not most of the time, getting that, getting out on one of those pops and not riding something back down. Again, we're not trying to have equity exposure. We want SPAC exposure. So, we don't have to wait until something turns into an actual company.
Yeah, definitely. I've been watching these for a while, and I've been waiting for an ETF for a while. I know Dennis Dick and I talk about it on pre-market prep, and we've been really waiting for an opportunity to diversify in these. So I definitely appreciate you bringing this product out to the market, and I'm going to be definitely doing my research. I've been seeing some of the holdings, and definitely interested. So. I think the SPACs is just getting started, and I think 2021 can even be hotter than 2020. So how do you see the trend in kind of multiple SPACs coming out? Do you think we'll pass that number from 2020, or do you think we'll go to like a lower amount of SPACs that come out?
I wouldn't be surprised if we pass that number. And where I'm really excited is, again, this is an uncorrelated, in many respects, asset class. I mean, the closest thing that you can kind of make a comparison is private equity. And I mean, I've always liked the idea of private equity, but in practice, for most people, it's hard to make something like that work. And, I think from an individual investor standpoint, they're going to start to really get this, especially with the market at the highs that it's at. If you get a whole bunch of downturns in the market and SPACs are, staying strong, people really hey, this is a great diversifier to a portfolio, and that'll make things even more interesting.
Yeah, one of the things that I've been looking at is, like you said, it's a relative, in my eyes, it's like the light got on this asset class. And we've had kind of hype kind of asset classes before. We had the cannabis kind of boom, the Bitcoin boom. And to me, this is kind of the next boom. And I'm just keeping my eye on them and trying to diversify also. So I really appreciate you coming on, Matthew. I know we have a couple of viewer questions. So Chris, if you have any viewer questions you want to go ahead and ask, go ahead and drop them in.
Yeah, sure. So one of the questions, Matt, that I'm seeing is talking about the expense ratio. So can you kind of talk about the expense ratio and how that gets factored in when people buy the ETF with their brokers?
Yeah, so the expense ratio is 95 basis points. It's, it has nothing to do with buying it through your broker. Your broker is either going to charge a commission or not. I think most of these brokers these days are, commission free or pretty close to it. And the expense ratio, just like any other ETF, comes right out of the top. You don't see it, touch it, or feel it, but certainly it's there. You've got to kind of factor that in.
All right. And then I'm seeing a question about CCIV. So that's your top holding. They are rumored to be a finalist for DirecTV. So what are your thoughts on the possibility of that being the SPAC target there?
Obviously it's our top holding for a reason. We are very optimistic that would go through. And certainly I could see us, if that does happen and you do see a pop, at least cutting that position down on a pop. If not totally taking advantage of it. Again, we'd have to see. But obviously we're pretty optimistic about that.
All right. And then I know when I talked to you last, you were looking at getting into some of these SPAC deals, when they first go public as units. What kind of competition are you seeing at getting into these new offerings? I'm hearing a lot of chatter that, hedge funds, are really trying to get in at those offering prices. So we're seeing some trade, right above $10 right away with those units. Have you been able to land any new ones? And what's the competition look like?
We have, and there's a lot of competition. The beauty of our situation is I've got 5 other ETFs that are very active. Then there's 3 mutual funds we're a manager on and 1 variable insurance trust. So we do a lot of trading with Wall Street firms. And so that allows us to get into some of this. So we just got 10,000 shares of Seven Oaks last week. It was Thursday or Friday. I don't remember what. We got it at 10. At one point it was 10.25. I don't remember what it closed at, but that was nice. And we got our full allocation. We asked for 10,000. We got 10,000. But certainly, and Wall Street knows the ones that are going to pop right away. And those ones, there's competition. So it certainly doesn't hurt that, that we do generate some commissions in our other funds that, gets us a seat at the table and pretty much anything we want.
All right. And then, so I know we talked about CCIV, Michael Klein, and then those Chamath SPACs. Are there any under the radar SPACs with great management teams that maybe investors are missing that you want to highlight for us here on the show?
Nothing I can think of that we haven't, already talked about. I think that the one thing that this marketplace doesn't have is a shortage of, reporting. So I don't know that there's a whole lot that's really under the radar at this point. Again, it's so hot. Everyone's talking about it. I think you've covered kind of my favorite positions.
All right. Go ahead, Mitch.
Yeah, all right. So the only last question I'm seeing in the chat is how many SPACs do you currently have in the holding?
So we're at about 42, give or take, 42, 43. Again, we've been in a couple of IPOs. We're sitting on some cash. There are a couple other IPOs we may be getting into. So we like to hold a little bit of cash for that. But, to me, that's a good number. We want, again, a diversified SPAC portfolio, and, kind of around that 50 number sounds to me about right.
All right, perfect. Well, I really appreciate you coming on, Matthew. I know we'll be probably bringing you back sometime next year. I know you'll be looking forward towards 2021 just like we will. Chris, anything else to leave off?
No, that's it. Thanks, Matt, for your time. We look forward to following this ETF and the progress and kind of seeing which names you're in. So again, to our viewers, that symbol SPCX. Anything else to add here, Matt, before we let you go?
No, again, I'm excited about 2021. I think this is an emerging asset class, and I think it's got nowhere to go but up.
All right. Well, thank you for joining
Matt.
us. All right, guys. Well, you guys heard it here, guys. The ETF right here, guys. SPCX. Definitely check it out, guys. It's been opened up. It opened up around 25. I'm going to go ahead and pull the chart up here. We've seen this one open around 25, go up there to 25.70s. I'm going to give this one a couple of days. What I want to see is kind of some volume coming into this, some loading up here, maybe let it come back and test this 25 where it opened. But definitely keep an eye on these ones, guys. And that's why we bring them to you. Anything you want to leave off with, Chris, today?
No, I love bringing these guests on. What great insight into the market. Again, we've seen some of the mainstream news talk about, are SPACs a fad? Is this going to go away? We see a new SPAC ETF where, he really believes that this is going to continue. This is a hot market, and, there are some great names still out there looking for targets, and that's what this ETF is going to hold, is those great management teams. So if you're a newer investor in SPACs, maybe looking for just some minor exposure, take a look at this ETF, do your own research, and maybe this is where you can get some exposure to multiple names going this route.
All right, guys, like always, smash that like below, support us, hit the bell, let everyone know. If you know anybody that wants to get into the SPAC game and needs some information, needs to start learning SPACs, definitely this is the show to be at, guys. So one of the things I'm starting a nice watch list, guys, for the 2021. I haven't gotten in any of these names, but I want to go ahead and start doing my research. So I want to put a couple of the names that I've been doing research on. One being SPNV. That's one that I'm going to be looking at. I know Chris knows a little bit about that one. Chris, what's up with SPNV?
Yeah, so this is Supernova. I like the management team here. This is the team from was it Zillow and Hotwire? Is that right, Mitch?
You got it.
Yeah. So you've got people with experience, in that housing market and travel. I like it. I like having two experienced people who have brought publicly, traded companies. So they have the experience there. I like the price point here, as we're not trading at too much of a premium. So that's definitely one I'm taking a look at too. So we're gonna bring you some new names for 2021 with those management teams to look forward to. Mitch, on Friday's show, I talked about Ajax, AJAX. So that's one that I think people should maybe look at. So the co-founders of Square, Instagram, 23andMe, and Chipotle. So a diverse range of founders. That one is starting to trade a little bit high to, net asset value here and at a premium. But I think with that management team, we're going to see a big deal, done.
Yeah, there's definitely some new ones coming out there, and some ones you can start to take a look at. The reason I brought up the SPNV was, like you said, close to that $10 range. I'm looking for a couple of these. I want to diversify. I'm looking for 10, 20 of these to do my own ETF. You know, at the end of the day, that's kind of what I'm looking at, you know, and if you kind of think about it that way and diversify, I think that, you know, in the long run, you have an opportunity here. So like always, guys, smash the like below, hit the bell. We'll be back tomorrow. We're gonna keep knocking some more executive interviews. I know there's some more coming up, but hey, Chris, you know, anything you want to leave us off on?
Yeah, so you know, you bring up interviews. So guys, tomorrow we have another interview already. So we have Nicolo Damasi who joins us. He is the head of DMYT and DMYD, so two SPACs that we've covered in detail on the show. And he's also the chairman of Glue Mobile, symbol GLUU. So we will be talking sports betting and gaming with him and kind of looking at those two SPACs that are coming public with him. So I'm really looking forward to that. So guys, make sure you tune in tomorrow. And if you have any questions, drop them in the chat either right now or tomorrow when we start the show, and we'll try to get to them.
Hey guys, you guys heard it. We'll have another executive on. The ticker's right here, guys. So definitely comment after, hit the like, and we'll see you next time on the SPACs. Attack, baby.